Stablecoins are cool, but do you really understand how they work? In this episode, Soumya will ask me some questions that he has about stablecoins, and I will try to answer them. Okay, so let's hear the first question.
All right. So a lot of people outside the US talk about stablecoins as this lifeline, faster payments, protection against crazy inflation. But if you're in the US, where the dollar actually works fine already, why would anyone there actually need to use stablecoins?
Yeah, that's a good question. That's a good start from the very beginning. Yeah, so what you said makes sense when you are outside of the US, right? When the currency is weaker, the infrastructure is weaker and untrustworthy. There is a lot of censorship, and you who doesn't want access to the US dollars in those conditions, right? But when you are already in the US and you already have a working dollar, what you are essentially want so why you want to use stablecoins is because of the ease of use, the convenience. It's The settlement time is faster when you are using blockchain. You are getting instant finality. You don't have to wait for the bank to uh, process the entire payment system. That might take a few hours to a few days depending on like where you are sending the payments to. If it's domestic transactions, then yeah, sure, there is not that much of a difference. But again, the system is actually much better when you are using stablecoins. uh, because again, like if you are using stablecoins, you are paying way less in fees uh, than compared to what the banking industry will generally charge you. But the questions, the scrutinies, sort of the censorship that the industry has on you. Like if you are sending money to someone, and if the sum is higher than something like $10,000-15,000, you have to disclose what this money is for, who you are sending it to. You might have to do a KYC. You might have to like wait to get some documentation from the counterparty to vouch for the payment, sort of like, I have the invoice, this is the reason why the payment is being done, etc., etc. There are a lot of traps. There are a lot of, I mean, obviously these were started with the intention of safeguarding the consumers, but very soon it became just inconvenient, and it's a nuisance when you are trying to conduct a simple banking. Like I just simply want to transact. I just simply want to pay someone $100,000 without asking 10 questions
Right.
from a bank that has no business knowing my business. That's pretty much where stablecoins come in, right? Nobody in When you are using stablecoins, nobody really is going to ask why you need something, or who is receiving the money. At least not today, but yeah, that's the essence of the answer for that question.
Understood.
Let's go for the second one.
Yeah. So if we look at the term stablecoins, they have the word stable in it. And
Yeah.
how stable are they really? Can they actually lose value, or the risk is more of a theoretical risk?
Yeah, they can absolutely lose value, right? We have seen several stable coins go down. One of the most prominent one was obviously the Terra Luna, which was an algorithmic stable coins, which went down and crashed essentially the entire crypto market, uh, wiped out a few hundred billions of dollars of market cap within a week or so, right? So yeah, they can absolutely go down. Now the question is, which stable coins are the most susceptible to this kind of risk, and why, and how do you prevent them? So first of all, if it's an algorithmic stablecoin, it's almost certain that it's going to fail because of the death spiral scenario, where uh, I have already we have already previously discussed in an episode how algorithmic stablecoins work, so I won't get too much into it. But yeah, if you are using algorithmic stablecoins, it's always susceptible to that kind of risk. But the kind of stablecoins that are generally safe are fiat-backed stablecoins. For example, USDT, USDC, and especially after with the Genius Act, the criteria, I would say the guidelines are pretty much set as to how a stablecoin company needs to operate. And the first criteria there is you need to have a complete reserve of assets that are much safer and much less riskier than any cryptocurrency or any other kind of equity or anything. So if you are issuing $1 worth of stablecoin on chain, you have to have that $1 backed up either in form of treasury, repo, or treasury bills, repo, or what is it, like USD, cash USD. So even if, let's say, a supply shock comes in, enormous amount of sell pressure, everyone is selling USDC, everyone is selling USDT. They need to be able to meet that demand. They will sell the reserve that they have, the assets that they have in their reserve, and they will pay you out. So
I see.
this is basically the safeguard that will stop stablecoins from crashing.
And since you already mentioned Terra Luna, let's talk about Tether. If something ever happened to USDT, would that shake the entire crypto market just like the Terra Luna incident? Or are we past kind of that instability now?
Uh, yes and no. Tether already is a gigantic stablecoins, right? Their value now, if something were to happen, if they were to lose their value, if there were to be a huge redemption demands on Tether side, it will in theory at least instabilize the crypto industry. We will again lose a few $100 billion worth of like market cap, maybe even yeah. But the thing is, Tether has previously withstood enormous sell pressures on more than one occasions. When Terra Luna went out, they faced billions of dollars of sales, billions of dollars since USDT got sold, and they were able to meet that demand. The same thing happened with when the FTX crash happened, and they were able to again withstand that pressure and redeem everyone that sold USDT in that market, right? So it's a clear proof, that they can survive in tough conditions, in tough markets. Not only can they survive, they can thrive after the event. And that's basically the answer based on previous performances. And right now,
Hmm.
they are already tightening up their reserve requirements. They are already in the process of launching an US specific tether USDT. So that means they will be compliant with the Genius Act as well. So everything, even if you did not believe in the resiliency of Tether as a company, you can rest assured knowing that they will be following the Genius guidelines, the Genius Act, and the guidelines that have set by the US government, and everything should be fine.
All right. And another thing that I've always wondered that bank deposits are insured, right? But is that the same with stablecoins? Like, what if the issuer goes down? Is your money just like gone?
Yeah, no. So with the Genius Act again, the Genius Act sets something pretty straight. It is that if in the event of trouble, the consumers, so the holders of the USDT or USDC gets paid first, and only after that, like the asset is sold out, whatever they have, treasury bills, repo, cash, whatever they have, it's sold out, and then it's distributed one to one through the holders of that specific stablecoins, and only after the holders are paid out, then the shareholders get their share. So
Wow.
if it's not like with stable FDIC insurance or insurances like that, you are only insured to a certain amount. Like if it doesn't matter how much money you have in the bank, you will only get till this amount. Like 200, I think with FDIC it's about 250K, but with a Genius Act sanctioned or Genius Act regulated stablecoin, it's going to be 100%.
I see. And I've also heard the issuers like can freeze or blacklist wallets. How true is that? If so, like how decentralized are these coins actually?
These issuers companies are completely compliant with government regulations, right? So if the government tells them to freeze a wallet, freeze a transaction, blacklist a wallet, whatever, they're going to do it. But up until now, what I'm seeing is, you can do it with in banks. You can do it pretty much with any assets, and the same thing can be done with the stable coins as well. Right now, from what I've seen, Tether has never really done anything close to freezing any account, but Circle has done it a few times. Although I won't say Circle is actually very active in the business of freezing accounts. Only when the accusations are serious, like this wallet is in the mix with terrorism, with the terrorist financing, or some sort of criminal activity, or some massive fraud, or some sort of, like, let's say this crypto protocol just got breached, and someone it has lost it. Someone has stole $200 million worth of assets, and they are moving it through stablecoins. Then they will go
Okay.
in and freeze it, right? So, but again, like that means that it's not
That
decentralized,
makes
obviously.
sense.
Yeah, exactly, that makes sense until it doesn't. When these
Right.
companies start overreaching their powers, right? When they start misusing the rights that Genius Act gives them. It doesn't. Most likely the companies won't, but the governments, a government who might force them to do something like that. And that's when the actual debate between like how centralized or how decentralized these stable coins are. And obviously, if you are not interested, like if you don't want to be limited by centralization, then you always have decentralized stable coins like DAI, like Ghost, and other things.
And if we speak legally, are stablecoins like fully legal in the US, or is it still a gray area regulation wise? And when it comes to the US, I'm also curious about the other parts of the world.
Yeah, I mean it is after like we have been talking about the Genius Act continuously now for
Hmm.
the last four questions. So yeah, the after the Genius Act passed, there are clear guidelines, and as long as you are complying with those guidelines, you are completely legal and allowed to operate within U.S. Jurisdictions. About the rest of the world, there are countries that are taking active steps. Like there are some regulations within MICA for Europe in the European Union territories, Hong Kong, Dubai, these countries have already done their stablecoin regulations, and they are in effect. So you are pretty much good to operate in those areas. Then we have got Japan, another country that are seriously discussing and giving out licenses for stablecoin issuers. China, South Korea, they are actively exploring for potential stablecoin solutions. So I will say the major economies, they are very much aware of stablecoins and what's going on, and they are actively, if not adopting it right away, they have a welcoming attitude towards stablecoins. So yeah. So that's pretty much the case right now. And as for the rest of the world, when these first world economies move, the rest of the world tend to.
Yeah, right. And I'm also curious, like, what's the real difference between stable coins and central bank digital currencies? Because on the surface, they sound kind of similar.
The only difference between stablecoins and CBDCs are the issuer. Stablecoins are generally issued by private companies, whereas CBDCs are always
Uh,
has to be issued by the government itself. So a stablecoin is backed by the actual currency or the actual assets of that country, whereas CBDC does not need to be backed. It is the currency. Like this is just the digital representative of the currency that already exists, and the government, instead of printing the money in physical forms or issuing the currency in through the banking networks, what they will do is they will just mint the currency in in an on-chain environment. Now, the reason that's it's CBDC and the and stablecoin debate is that when a private company issues stable coins, there are several entities that will do the oversight stuff. There will be specific guidelines. There will be agencies monitoring and auditing these companies continuously to see that they are compliant and what they're doing is legal. The problem with CBDCs is the blockchain gives you enormous power. They give you complete visibility, and if you can tag a wallet with an individual, then you can essentially see their entire financial footprint. You can see who like how much money they're earning, how much money they're spending, where they're saving, where they're investing, and in the events of a government overreach, you essentially surrender your entire financial record to the government, and they will pick and choose who to punish and who to take actions against and not. And that's just a gross overreach of fundamental human rights, right? So that's basically why CBDCs are so widely criticized. And stablecoins are safe because if any stablecoin company starts doing it, there are agencies and there are governments who will crack down against it. But when a government does it by itself, there are no overruling authorities here, right?
and also, people talk about earning yield with stable coins, but where does that money actually come from? Is it just T-bills or something behind the scenes, maybe something more risky?
I mean, the yields come from the T-bills in general, yes, and also the repos on the interest they make on those loans, right? So when you are essentially, if you're looking at the reserve of USDC of Circle, you will see 85%, 90% of it is just short dated treasury bills. What that means is you are buying 7 days, 15 days, 90 days
Hmm.
T-bills that offer you some sort of an interest rate, and that interest rate is generally between like 4 to 5%. And if you are managing a reserve of 60-65 billion dollars, that money, that interest rate after a year becomes huge. So that's essentially where the source of the yield comes from. Now, the Genius Act again, the Genius Act prohibits you from sharing that yield directly in the form of an interest, but there are other ways that stablecoin companies are figuring out to reward customers for holding stablecoins, essentially. So no, as long as these companies are compliant and they are doing what's generally believed to be best practices, these are not risky at all. These are one of the safest assets that they are earning the yields from.
And what happens if the US Treasury ever goes like no more T-bills for stablecoin issuers?
I mean, that will be just financial suicide. Okay, maybe that's just a bit harsh to say, but yeah, I mean, why would they want to? The stablecoin industry is making them so much money, or and they
Right.
stand to make so much money from the sales of T-bills, and not just like from the sales. Like when you buy enormous amounts of T-bills, two things happen. The government has more money in their in the treasury now. That's number one, and number two is the demand rises so much that the interest rate actually falls. So the US government has to pay less in interest to other borrower to other lenders. That means they're earning from both sides. Why would they want to stop that kind of a money faucet, right? Unless you are some sort of like an extremely left-leaning socialist, restrictive financially restrictive administration, you don't want to do that. Yeah, so it's. I mean, I know that. A lot of people say that the stablecoin business is predicated upon the existence of this T-bill industry, if you can call them that, T-bill market, and that's the main source of revenue. But again, it's a win-win for both sides. It's a win-win for the stablecoin issuers as well as the government.
I see. And my last question for today would be, there is something that I've heard folks from traditional finance, like they constantly keep saying it. Like, are stablecoins really like unlicensed banks issuing currency?
No, these stablecoin issuers are in banks. The stablecoin issuers cannot pay interests. But what they can do is they can create currency. Yes, which banks can do. Banks can create credit using the fractional reserve banking model, right? But what the stablecoin issuers can do is create and issue currencies on the blockchain, and following whatever asset requirements there are, right? Now, what the general I'll say what the general criticism from traditional finance folks is that private stablecoins issuers will start acting like wildcat banks, and then there will be crashes, and everyone will lose their savings and etc. Like it happened in like our early 1800s US, because at that point banks were allowed to some extent to create their own currencies. We actually did an entire video on free banking, on the free banking industry, and successful examples of it, like Scotland, like Canada, and we clearly showed that how this entire free banking era has been misrepresented, and essentially we have been lied to by these traditional economists, that they say like wildcat banks has essentially destroyed people's savings and people's trust in banking in certain areas. But it's completely not true, right? Again, like without going so much into the details, no, like these stablecoins issuers don't act like unlicensed banks. There are clear guidelines now set up by the US government and by other countries as well, and as long as you are compliant with those guidelines, you are fine. You are not doing anything illegal, and the system is completely robust and much more convenient than what we have seen in the banking industry.
All right. That makes sense. And thanks for, first of all, answering all my questions. And I think if people have any doubts, they can also put it in the comments,
Oh yeah,
and Romeo
absolutely.
will answer.
Yeah, we'll try to do another episode like this in future, and
Mhm.
I'm very happy to take questions from.
And maybe we can make an episode out of the questions that are asked, and then we can go question by question itself.
Yeah, absolutely. All right, ciao.
That's all for today.